Imagine this. You're sitting at your desk, staring at your screen, and with just one click, you could make $10,000 or lose it all. No, this isn't a casino. This is options trading. Sounds thrilling, right? But before you dive in, let's break it down so you don't end up crying into your coffee. Options trading is like having a superpower in the stock market. It gives you the option to buy or sell a stock at a specific price, by a specific date. But here's the kicker. You're not obligated to do it. Think of it as a maybe button for investing. You pay a small fee, called a premium, for this privilege, and if the stars align, you could make a killing. If not, well, you're only out the cost of that premium. Now, let's talk about the two main types of options, calls and puts. A call option is like betting on a horse to win. You're saying, I think this stock is going up, and I want the right to buy it at today's price, even if it skyrockets later. On the flip side, a put option is like betting on a horse to lose. You're saying, I think this stock is going down, and I want the right to sell it at today's price, even if it tanks. Simple, right? But here's where it gets spicy. Options trading isn't just about predicting whether a stock will go up or down. It's about timing, strategy, and a little bit of luck. You can use options to hedge your bets, like an insurance policy for your portfolio. Or you can go full on Wall Street wolf and use them to speculate, leveraging small amounts of money for potentially huge returns. But beware, this isn't monopoly money. The risks are real. Speaking of risks, let's get real for a second. Options trading is not for the faint of heart. The market can be as unpredictable as a cat on caffeine. One day, you're riding high. The next, you're wondering why you ever thought this was a good idea. The biggest risk? Losing your entire investment. Unlike stocks, options have an expiration date. If the stock doesn't move in your favor by then, your option becomes as worthless as a screen door on a submarine. But wait, there's more. Options trading also comes with its own language. Terms like strike price, premium, in the money, and out of the money can make it feel like you're learning a new dialect. The strike price is the price at which you can buy or sell the stock. The premium is the cost of the option. In the money means your option is profitable, and out of the money means it's not. Got it? Good. Now you sound like a pro. Now, let's talk about the potential benefits. Why would anyone want to deal with all this complexity? Because options can be incredibly powerful. They allow you to control a large amount of stock for a fraction of the price. You can make money in a rising, falling, or even sideways market. And if you're clever, you can use them to protect your portfolio from losses. It's like having a Swiss Army knife in your investing toolkit. But here's the thing. Options trading isn't a get-rich-quick scheme. It's a skill, and like any skill, it takes time to master. You need to understand the market, have a solid strategy, and most importantly, manage your risk. Don't bet the farm on a single trade. Start small, learn the ropes, and don't let your emotions call the shots. Remember, even the pros lose sometimes. So, should you try options trading? If you're curious, disciplined, and willing to put in the work, it could be a game changer. But if you're looking for a sure thing, this might not be your jam. The market doesn't care about your feelings, your dreams, or your rent payment. It's cold, it's calculating, and it's always right, even when you're wrong. Options trading is a tool. A powerful, risky, and sometimes lucrative tool. Whether you use it to build wealth or blow up your account is entirely up to you. So, what's it going to be?